What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use can be implemented with any company that's publicly traded in the US stock market. So make sure you hit that like button if you enjoyed this video. It really helps the channel grow. It's free. Thanks to all those who continue to tune in, give us a thumbs up. And leaving comments as well. We like the interaction that we've had with you all. Anyways, if you haven't already, make sure you hit that subscribe button as well. Also that notification button, because we do release some bonus content from time to time, and we're actually trying something new where people have asked for. I don't want to say behind the scenes, because it's not really behind the scenes. It's just, they want to see more of the prep for the nightly videos. So we have started putting out a second video every day, which goes over the prep for today's video. So if that's something you're interested in, make sure you check that out as well. The main objective for the nightly and weekend videos, like tonight's video, are for focusing on identifying like the triggers and targets for trades ranging from scalps and intraday trades to long-term swings and leap trades as well. So if you want more information about how exactly we set up our charts, putting out the broadening formations, levels of support, resistance, make sure you check out the bonus content. We've got a couple of videos that dive deeper into that for you, or check out the prep videos. Might give you a little bit of insight as well, help you kind of slowly learn everything instead of just getting it all in one video. But anyways, there's also a link to a free video, a free PDF, quick reference guide for the strat, which is the base of our charting and trading method, talking about, the 3-candle reversal patterns and broadening formations. So make sure you download that and check it out so that you can understand, what exactly we're talking about in this video. The concepts are basically, higher high, lower low type of concepts, very basic concepts. But the strat just gives a very easy way to identify what we're seeing, right? It's just a three number system, 1, 2, and 3. A candle is either a 1, 2, or 3, and from there are about 12 reversals, 12 main reversals that you can find on the charts. And so just give it a check out. But let's take a look at today's agenda. I encourage you to watch the full video, because we do give the triggers and targets, but we give some insight into all time frames. So again, let's take a look at today's agenda. We'll go ahead and recap the price action from Wednesday, January 7th. We'll zoom out like we always do and look at the week, month, quarter, and year charts. Then we'll zoom back in to set our 4-hour markers and the triggers and targets for, that should be Wednesday. We missed that in the prep, huh? We'll look over the triggers and targets for Wednesday, January 8th, and we'll do a quick review of the triggers and targets for the week, month, quarter, and year as well. So first, we will take a look at the 5-minute chart for today's price action. And there was another request that we had to make things a little bit larger. We're going to do the best that we can, because when you start to zoom in too much, you start to lose perspective, and I never want to lose perspective. Yes, it is nice to be able to day trade and find scalps and things of that nature when you're zoomed in, but the real money comes from the swings. That's where you can make real money. So you never want to lose perspective of where you are on the higher time frames, the day, the week, the quarter, and things of that nature. So you want to, even if you are on a smaller time frame, you want to kind of zoom out a bit to get perspective of where you are at in those larger time frames. So like today or yesterday, we were at the top of the range, or just slightly above the range that we had been in for a little over a month. So it's perfectly reasonable to think, hey, we might pull back into that range if we've just got a ranging market at this time and not a trending market. So we are going to zoom in as much as we can at certain parts, but unfortunately, if you are watching on a phone, probably the biggest numbers that you'll see are towards the end of the video when we show our notes for the triggers and targets. They're very plainly laid out, and you should be able to see them a little bit better if you're on phone when we go over those notes. So yeah, getting into today's price action, starting out on the 5 minute like we always do, it allows us to take advantage of the proven and repeatable strategy that we use. That strategy is very simple. We look for the opening print and we watch for what price action does from there. Especially early on in the day, if we get a higher low at or above the opening print level, we want to look to get into calls. And if we get lower highs at or below opening print, then we want to look to get into puts. So pretty simple. You do want to have your 4-hour markers on the chart. We do have, yeah, so up towards the top is previous high a day, overnight high. Got our opening print, obviously where the first traded price of the day is, overnight low, and previous low a day, right? So those are the main 4-hour markers, because if you do get that lower high at or below opening print and you get into a put, your first target is going to be overnight low or previous low a day, whichever one comes first, and your second target would be whichever one comes second, right? Same to the upside. If we get a higher low at or above opening print, your target is going to be either previous high a day or overnight high, whichever one comes first, and then obviously the second one is your second target. So today, real sideways day, right? We really didn't even do too much. But watch, we tried our hand at one put, made minimal profit, might as well just call it even. So it wasn't much for us to say, from our group specifically. So we hope that, if you are one of those people that likes scalping on those lower time frames, 1 minute to 3 minute, things of that nature, hopefully we're very successful today. But today was more of just kind of a watch and, consolidation, bullish consolidation in our opinion. We can see here, we got our opening print. We pushed down, bounced off of essentially previous low a day or last quarter's high. That's this solid yellow line, 50.76, right? We bounced, we made a lower high, but then we made a higher low, right? So once we did that, we had to see, all right, if we then made a lower high again, are we going to consolidate, or are we going to make a higher high and actually start an uptrend from this higher low position? So we did bounce, made a higher low. We were considering getting in on that move, but it was below opening print. And when you take a look at the internals, market internals, let's just bring up the tick, maximize sell. You can see that early on in the day, the tick was really, even to negative, right? It did push up a bit, but even when it pushed up, it was still just staying around the zero line. Did have a flash up to the trend higher zone, but it immediately dropped right back to the zero line, and then started playing just below the zero line again. So nothing from the tick indicated that we were going to really push hard to the upside. If you look at the vol QD, it was okay, right? It was pushing up, but it was nowhere near the trend higher zone, right? The trend higher zone was all the way up here, 400 million. So basically just running the zero line here as well. Let's go to the ADQD, market breadth. If we look at that, it was dropping all morning. Yes, it did push up, but that's after it was below the zero line. So nothing here was indicating that, we were going to have some strong push to the upside. So that's why we didn't participate in this higher low that we got here, especially because it was that below opening print. Sometimes we do take on that added risk, but if we do take on the added risk of taking a higher low below opening print, we need those internals to reflect that we're going to be, we should be pushing higher as well. And we just didn't have that today, so we didn't do that. Essentially what we did is we came back down and played with overnight low and opening print. It's, we bring into the picture market makers expected move high. Again, if you're not familiar with that level, check out our weekend video where we dive deeper into that. But it's not an end all be all level, but if 70% of the time it's right, we can see why we were just basically playing with that level all day. But yeah, if you did, we did take this lower high at opening print. I remember specifically because is right at opening print, and we were able to write it down and held it most of the day, but essentially ended up coming and making a, where was it? I think it was right around here. We made a higher low, higher high. Yeah, it was just right around here. We ended up getting out, so nothing really. From our entry here to the exit here, it was nothing. So that's what we had for today for our group. Again, hope you had a little bit better success yourself. Now, if we zoom out a little bit, start looking at like the 1 hour, we can see that, let's put up the tomorrow chart. There we go. We can see that a new hourly broadening formation was formed, right, from this high, higher low, up to this high, and then got another low. So this blue broadening formation, oops, let me make this bigger. I'm trying to remember for you guys who are on phone to make this bigger, but sometimes I just get to yapping and forget. But you can see hopefully here on a more zoomed in scale, we had this high, from Monday, this higher low later on in the day, which wasn't confirmed until Tuesday when we gapped up. And that took us up to this high, which we dropped from obviously today. So from high to higher high is our broadening formation on the hour chart. 4 hour basically was just like the day, right? There were no higher lows here. Let's get a better chart up for everybody. From this, this bounce from this base, the flag basically of what we're calling the holiday bull flag, right? Here's the flag pole, here's the flag, right? From that pop, we never had a higher low. So no real broadening formation to draw on the 4 hour, but we did have where, this smaller broadening formation we were in during the holidays. Within this larger broadening formation, we did have to extend this up to here and this up to here. So high to higher high, high to higher high. So we do, from a daily perspective, the bottom broadening formations are pretty horizontal in comparison to the upper broadening formations. So it does appear that we should continue to move higher. Let me zoom out just a little bit so you can get a little bit of perspective, right? See, there's that broadening formation, but the lower ones are, pretty flat. So it would suggest we were going to move higher. But if you look in the larger broadening formation on the day, we could be, just hitting some more resistance. Even if we pop up tomorrow, we could just be hitting some more resistance on this daily broadening formation, which also lines up with this 150% fib extension of the April 7 bull flag. So, that would make sense. But from the day perspective, we did get a failed 2 down, right? So as of right now, it's looking pretty good for Wednesday's price action to just be a higher low and the trend sequence going up. However, we do need to wait for overnight and pre-market, as well as the economic numbers that are going to be released tomorrow. For all we know, we could just slide down a little bit more tomorrow, unless numbers are really bad and we get some catalyst that pushes us down. I'm expecting maybe just a little bit of a slide down tomorrow if we do slide down, if not just sideways action, waiting for Friday's final numbers, right? So from a day perspective, pure candle structure, it does look good for a 2 down, 2 up reversal tomorrow. Right, got a nice hammerish action on the bottom side of the candle. It is a doji, right? But the bottom candle, the bottom wick is 2 to 3 times larger than the top, so I call that a hammerish wick. I'm sorry, a hammerish doji, because the bears had their chance, but the bulls bought it right back up. So yeah, we have the opportunity to put in the higher low. At the same time, there's plenty of room and gaps to the downside for us to pull back and set some type of higher low down here, right? Remember the 50% line of 2024, how big of resistance that was here, 46.79. This white dashed line that we have here, we kept it on the chart because of how much resistance, support, resistance, support, resistance, support. It was major resistance support. So we kept that on the chart. So if we do get a bigger pullback, again, not something to really worry about. We've got plenty of room to put in a higher low. Can get all the way back down to this 42, 43 area before we have to really start worrying, right? And even then, that wouldn't be the biggest problem in the world, because it would just be testing last month's 50% level. So if we got some type of bounce off of that 42, 43 level, just taking it in stride. From a higher time frame perspective, nothing's breaking down. Let's go ahead and go to the week, a little bit higher time frame. Let's get our week chart out here with the weekly broadening formations. So again, we talk about the April 7 bull flag. Let me just bring it up one more time for anybody who's new to the channel and didn't really see it. Right here is the April 7th low. Here is our flagpole. Here's the flag, and then we drew Fibonacci extensions from there, and you can see that those Fibonacci extensions are basically what we're playing with at this time, right? So we obviously hit that 138.2, went through it, wicked almost to the cent off of the 150 fib extension. So again, another reason to see that it could be reasonable for us to have a pullback. If we do pull back, if we get the 2 down next week, that will trigger a 3, 2 up, 2 down. So that should take us right back down to the low of this 3 and the middle of the range. So again, even if we get that big of a pullback, it's just the middle of the range that we've been in for months now. And, it's not the end of the world. So definitely more bullish than bearish on the higher time frames. Not even really neutral on the higher time frames. I'm just more bullish than neutral or bearish. If we look at the month, let's bring up a little cleaner chart here. We can see that we finally went 2 up or higher high here in the sequence from the April 7th low, with that November being a higher low on the month chart. So we're just continuing the uptrend on the month. So again, just more bullish than bearish, but we do have to watch out because December was a 1 or an inside candle. So with this month going 2 up, we've got to watch how it finishes. We need to make sure we finish strong, finish in the upper half of the candle to have our best chance of pushing for another 2 up and not going 1, 2 up, 2 down. Which, if we do that on the month in February, if we go 2 down in February, that triggers at 1, 2 up, 2 down, and the magnitude of that move is not the low of the 1, but actually the candle to the left of the 1. So that would, be looking at taking us all the way back to this $28, $27 level, the top of that range that we were in from, was it June to October or whatever, September. So again, not predicting that will happen, but just making sure we are aware of what will happen. If we do go 2 down next month, that would create a monthly broadening formation. If you're familiar with this channel, the monthly broadening formations are green. So this is just hypothetical. If we go 2 down in February, that would make a monthly broadening formation that is significantly more horizontal in relation to the previous or the most recent monthly broadening formation that we would have had out there. So just something to keep in mind. But things are still looking good from the month perspective, right? We've made this higher low and gone higher high. So uptrend on the month. On the quarter, we don't have an uptrend set yet, but we are still, dead in the middle, or not even dead in the middle. We're starting to get to the upper half of this 1 combo 2 down, combo 2 up reversal, right? So that triggered when we went above the above the high of this first 2 down after the 1. So the first quarter of 2025 went 2 down, and that the high of that candle is the trigger for that larger 1 combo 2 down, combo 2 up move. So as long as we're above this 36.15 level, that is still in force, and the magnitude of that move is the high of the candle to the left of the 1, just like the 1, 2 up, 2 down we were talking about as a possibility on the month. The magnitude was the low of the candle to the left of the 1. Well, this is a 1, 2 down, 2 up, so the magnitude is not the high of the 1, but the candle to the left of the 1. That puts us all the way up here at 70.08, and that ties directly into the year chart, where we have where we have triggered this 2 down, 2 up on the year, and that 2 down, 2 up magnitude is the high of the candle to the left of the 2 down, which again is that 70.08. So 70.08 seems to be that magic number. We've got this gap up here at 60 that could act as a something to continue the momentum going up to that level. But again, this is why I'm bullish on the higher time frames, right? The lower time frames right now can do what they want. We can range, we can just go sideways for now. That's fine. That just gives us more time to load up or continue to stack cash to the side and wait for that second break. So everything's looking good, and not much else to say about that. Let's go ahead and zoom on into the 5-minute and take a look at what what we could be looking at tomorrow. Scalp tomorrow, right? So let's go ahead and let's make sure we've got our 4-hour markers. Again, just trying to make sure everybody can see, but still have proportion. Up at the top of the chart, we've got previous high day. As of right now, we'll just say the overnight high is right here around that market maker is expected to move high, basically where we opened today. We are down 0.5% in after hours as of right now, so that's why I'm just kind of setting up this hypothetical to show more of like price action pushing down a little bit in the after hours. So let's just say overnight high is there, overnight low is down here around 51.33, still within yesterday's price range, or to Wednesday's price range whenever you're watching this video. And then we've got previous low day down here at 50.84. So let's just talk about it real quick. The proven and repeatable strategy. We just look for higher lows at or above opening print to get into calls, lower highs at or below opening print to get into puts. So let's say tomorrow opens up in the middle of overnight price action. If we push up, maybe reject off an overnight high and then pull back and get some type of higher low at or above the opening print level. If we get that higher low, we want to get into calls. We're first going to target overnight high, and the second target would be previous high day, right? Now, if we open and we push down, maybe we bounce off an overnight low and we push back up, but then get a lower high at or below opening print, then we want to look to get into puts, targeting overnight low and then previous low a day. So, we've got a lot more economic data to be released on Thursday as well as Friday morning. So it wouldn't surprise me if we range again tomorrow or just have a, sideways type of day, maybe, slightly sliding down a little bit more. But just from a purely scalping perspective, or if, we do have a trending day tomorrow for the early entry into that trend, the rule is get that opening print, look for higher lows at or above opening print, get calls, lower highs at or below opening print to get puts, right? Let's look at the 4-hour for more of a full day trade, possibly overnight swing trade type of situation. We can see that we had this two down in the first 4-hour candle of Wednesday, and then an inside candle on the second 4 hours. So what that does is sets us up for a possible 1-2 up, 2 down, or a 1-2 down, 2 up reversal tomorrow. So if we get price action to the upside and we go above the high of the second 4-hour candle from Wednesday, then we trigger this 2-1-2 up reversal, which would trigger at the high of that second 4-hour candle from Wednesday, and the magnitude would be the high of the day, which is 52.74. That's the high of the candle to the left of the one. So 2-1-2 up, not a lot of magnitude there. 2-1-2 down, not a lot of magnitude there either. But what that does is set up a possible 1-2 up, 2 down, or a 1-2 down, 2 up, right? So if tomorrow's first 4-hour candle, if Thursday's first 4-hour candle goes 2 up, then we're set up with the 1-2 up, and you got to watch how that 2 up finishes. If it's an inverted hammer or just a straight red candle or something like that, there's a high probability that we go 2 down in the second 4-hour of Thursday's price action, which would trigger this 1-2 up, 2 down. Now, the reason why I say I wouldn't be surprised if we just range is because even if that's triggered, the magnitude of that move is just the low of the candle to the left of the one. So it's still just previous low a day. Nothing to really do, right? So the same in reverse to the upside, right? Or to the downside. If we get price action to the downside in the first 4-hour candle of Thursday, then we're set up to, again, watch how it finishes, because it could be setting up a 1-2 down, 2 up. But again, the magnitude of that move is only previous high day. So, I could see us just going sideways tomorrow with just, intraday up and down price action, right? Now, if we do go, 2 up in that first 4-hour tomorrow and we reach magnitude and we keep pushing, now we're triggering a 2 down combo 2 up, and that magnitude is back up here at Tuesday's high. So that I would be interested in if we break above previous high day and then make some type of like higher low on the smaller time frame, 5 minute, 15 minute, something like that, and then get that bounce, right? At the same time, things could snowball to the downside as well, right? If we go 2-1, 2 down, we reach magnitude and we continue to push down, then technically we are triggering a 1 combo 2 up, combo 2 down. And that magnitude is the top of this gap here. So that would give us a lot more magnitude to the downside. At the same time, if that happens, I've got to scrunch this up just a little bit so we don't lose perspective. If we do pull off that 1 2 combo 2 up, combo 2 down, and we reach magnitude and we continue to push down, which is a very high possibility because we have a gap here at the magnitude. If we continue to push into that gap, then technically that triggers this 1 combo 2 up, combo 2 down as well, right? And now we're looking at the top of the second gap, or the gap from Friday, right? So not only is that the top of the gap from Friday, that's last week's 50% level. That's this week's flip level, right? That's where the week, month, quarter, that's this month, quarter, and year's flip level, right? That's where the month, quarter, and year would flip to red from green, what they are right now. So we definitely don't, it depends on how you look at it. I'd be fine with the pullback. If you're a bull, if you've got calls, especially short-dated calls, that's not something that you're going to want to see. But at the same time, if you are someone that takes advantage of, downside action, either selling calls, buying puts, things of that nature, then, this is kind of a juicy opportunity for us if we can get that snowball action. The question is, though, will we get that in the face of this uptrend that we're in? We'll see. Again, it can all come down to economic data. Let's look at the day chart real quick. On the day, come on, Thinkorswim, work with me here. There we go. On the day, we did have a failed 2 down, right? So from just a strictly candle structure perspective, that does put us in this position to go 2 down, 2 up tomorrow. So again, if we break above Wednesday's high, then we're looking at a magnitude of Tuesday's high. Now, if we go to the downside, if we break below Wednesday's low, now we're triggering this 2 up, combo 2 down. First magnitude being the low of this 2, which again is the top of the first gap. If we proceed below that and into the gap, that triggers this combo 2 up, combo 2 down, which has a magnitude of that month, quarter, year flip as well. Top of the gap from Friday. Now, again, we do have this major support resistance level of 46.79, 2024's 50% level, and you can see how it's been support and resistance, major support and resistance at the top of this range that we've been in for the last couple of weeks. So do we turn what was resistance into support here if we do reach that level and not actually reach magnitude? That is a possibility. So just want to make sure everybody understands what is the possibility for tomorrow. If we get a decent catalyst, I think we make a pretty good move in either direction, whatever the catalyst is. But if, especially if like economic numbers just fall in line with expectations, we could just see another sideways day, slightly moving down day, something like that, and waiting on, the final jobs numbers that come out on Friday as well. So, or employment numbers, it's ADP employment jobs was today. So, we could just be in a kind of a holding pattern until Friday. But that's what we've got. We do have options for either direction. Let's go to the notes so that we can just look at the hard numbers. Looked at the charts quite a bit here. So for Thursday, January 8th, there will be 247 trading days left in 2026. The close price on Wednesday, January 7th was 52.29. So it leaves the week, month, quarter, and year green. We know that these are the levels that it would take to make each of those time frames turn red. We know that the market maker's expected move for the week was $5.01, giving us a range of 52.25 to 42.23. We're sitting right there around that 52.25. So again, it's not an end-all be-all level, but it is a level of interest, right? The market maker's expected move is built strictly off options interest. So there is a reason for that level. So another reason why we could see some sideways action. We know where our gaps above are and our gaps below are. Keep those in line at all time. And we know that on the scalping perspective or an early entry perspective into a trending day, we want to look for higher lows at or above the opening print to get into calls. And we want to look for lower highs at or below opening print to get into puts. We talked about on the 4-hour chart that we do have a possible 2-1-2 down that could that could form if we go to the downside in that first 4-hour candle. That triggers at 50.99 and has a magnitude of 50.84, so there's not a large magnitude there. But if we reach that and go below 50.84, that then triggers the 1 combo 2 up, combo 2 down. First target being 50.09, magnitude of the move being 48.63, and if we do got a bunch of momentum going, we could go all the way down to that 48.09. On the upside, we could pull off that 2-1-2 down, 2-1-2 up reversal, triggering at 52.34, magnitude of 52.74. So again, not a lot of magnitude there, but if it does reach that point and go beyond it, we then triggers this 2 down combo 2 up, giving us 53.31 and 54.30 as our extended targets. On the day chart, the 4-hour triggers and targets roll right into the day triggers and targets, right? So if we get this 2 down on the day, triggers at 50.84, magnitude of 48.63, we go below that then triggers a 2 up combo 2 down, gives us some extended targets with an ultimate magnitude of 45.08. If we go to the upside, right, if that strat runs to the upside and we keep going, then we trigger the 2 down 2 up on the day, giving us a trigger at 52.74, magnitude of 54.30, and extended targets of 55.51 and 56.56. On the week, we talked about, we won't go back to the charts for the rest of this, but on the week, we are green, and we talked about how we triggered the 3-2 up, which technically triggered the 2 down combo 2 up at 48.09. We've hit a bunch of targets already, but we do want to continue to move up into those higher targets, which plays into the month because we triggered this 2-1-2 up, which again did reach magnitude, but continuing to reach these extended targets on the month only plays into this 1 combo 2 down, combo 2 up that we're in on the quarter, which as long as we're above this 51.91 level, or really 36.15, then we can, we have a magnitude of 70.08 on that move, and for on the way up, we have milestones that we could hit. That could be points of reversal or sideways action. And on the day, which then plays into the year, where we've gone 2 down, 2 up on the year, triggered at 50.76. So as long as we're above that 50.76, the magnitude of that move is 70.08. We get past that, and then we're starting to look at all-time highs up here at 74.21. So that's what we've got for today's video. I hope everybody enjoyed it. Tried to cram in as much information as we could without taking up too much of your time. Don't forget, we do have the prep videos, the videos that we do while prepping for the actual nightly episodes that will be out there as well. So if you want more time looking at how we do our charts, go ahead and check into those as well. But that'll kind of wrap it up for today. Again, it's a free video, so all we ask is that you give us a free thumbs up. Again, it really helps out. Goes a long way in helping us understand where we're reaching people, how we're reaching people, and if we can better help people. So thumbs up goes a long way. Definitely leave a comment down in the comment section. Positive, negative, doesn't matter. Especially if it's positive. If it's negative. If it's constructive criticism, we have no problem with that. I'm totally open to anybody's suggestions. If it's positive, that's great as well. If you want, but if you want us to quit rambling so much on the lower time frames, let us know. If you want us to, go deeper in on the higher time frames, let us know. We're open to anything. And just like how we tried to accommodate for those on smaller screens today, we hope that this has helped. The slight changes that we made in the video have helped out a little bit. I'm going to go ahead and increase the size of the triggers and targets. Where's my notes? Come on. Why can't I zoom in? Well, we were going to try and make these larger. Let's try this. There we go. You know what? Let's do that for the whole thing. And hopefully this helps people out. There we go. That should help out a little bit. So if it was a little bit hard to see the charts, hopefully the notes here are good enough for everybody. But, like I said, we'll end it here. Just like we always do. If you're watching this Wednesday night, we hope you get some good rest tonight. Wake up refreshed tomorrow. If you're watching this Thursday morning or during the day, we hope you got some good rest last night and woke up refreshed this morning. And we just look forward to getting out there and trading with you.